Welcome, friend. VAT stands for Value Added Tax. It is a consumption tax imposed on the value added to goods and services at each stage of the production and distribution chain. Unlike a sales tax, which is levied on the final consumer at the point of sale, VAT is collected at each stage of the production and distribution process. Businesses collect the tax on behalf of the government and remit it to the tax authorities. Here's how VAT works. At each stage of the supply chain, businesses add VAT to the value of the goods or services they sell. The amount of VAT added is typically a percentage of the selling price and is determined by the government. When businesses purchase inputs, raw materials, goods, or services, from other businesses, they can usually claim a credit for the VAT they paid on those inputs. This means they can offset the VAT they collected from their customers against the VAT they paid on their purchases, resulting in a net amount to be remitted to the tax authorities. Ultimately, the final consumer of the goods or services bears the burden of the VAT, as it is embedded in the price of the product or service they purchase. VAT is commonly used by many countries around the world as a major source of revenue for the government. It is considered a more efficient and equitable tax system as it ensures that all participants in the supply chain contribute a portion of the tax, regardless of their role as producers, distributors, or consumers. One advantage of VAT is that it reduces the possibility of tax evasion because each business in the supply chain is required to report and remit the VAT they collect. Additionally, VAT is generally considered less regressive than some other consumption taxes, as higher-income individuals tend to spend a smaller proportion of their income on goods and services subject to VAT. It's important to note that VAT rates and regulations can vary significantly from country to country. Some countries have multiple VAT rates, with different goods and services taxed at different rates. Others may have exemptions or reduced rates for specific items, such as essential goods or certain services. Businesses operating in countries with a VAT system must comply with the relevant tax laws and regulations and ensure proper reporting and remittance of the VAT they collect.